Welcome to the StockMentor.com studios. I'm your stock mentor, Brian Johnson. Consolidation day again today. More of what we kind of saw, yesterday. First couple days of the week have been very slow, consolidating for the next move. Obviously, anyone's guess where we're going to go, but my bias, if I have to have one, is still neutral to bullish. Has to be, just has to be here. This consolidation up here has been good for the bulls. The bears have really had no inclination to pull this down with any great zeal. So for the time being, you've just got to give the benefit to the bulls. This looks like a bull flag for the time being, just a pull back, waiting for the next spring higher. That move would be back above 10,450. Ultimately, is a big level to break. I'll show you why on the next chart. 10,480, and ultimately the more conservative trade I think is kind of above this 10,480-ish, 10,500-ish mark if you want to get into a trade. But you want to be very cautious. Taking this on an intraday basis only, I don't think I'd be real confident holding overnight to the long side if we started our way up. The reason being is I really do think this looks like a 1, 2, 3. This is some sort of an awkward 4 here. If we break above this area, that would, kind of fulfill a 5 wave. Maybe we've already completed it here. It's anybody's guess, whatever. But any breaks up and above here would definitely confirm the start of this next new wave, which I think would be just a small 5 wave up into this area. See these two lines? Anywhere in there, it can turn, it can stop. I don't know where. It could be anywhere. All depends on where the markets decide to take us. So you want to be very cautious if you're going to hold overnight. I just wouldn't play that game. I just wouldn't. I'm more conservative, more cautious that way. I wouldn't take that gamble. From a daily, 10,450. Why? It's the 200-day moving average. That's what's holding us up right here. So we moved right up into it Friday, moved down away from it on Monday, trying to test our way back up here. So at this point, we're only 2 candles into it, but looks like the potential start to a high base formation confirmed once we break above this area. Now we get back below these moving averages. Okay, now things maybe start to change. I'm going to look at this blue line as lower support at that point. That would mean a pretty sizable chunk once we got below here. That's still another 100 points or so back to the blue line. So overall, back below 10,240, maybe back into the 10,100 mark, and that would certainly be what I'd be watching, along with maybe right around in here for some light support on the way down. NASDAQ on a 60-minute. Now the markets are kind of moving back in tandem, where the NASDAQ has been the stronger of the indices, which is very common. NASDAQ 100 has been even stronger than the NASDAQ itself. That is kind of everything back in order again here. It's exactly what we would expect to see. Take the 100 strongest NASDAQ stocks. It should be outperforming everything else, and it is. Up again today, breaking to those new highs. This is, look at the pattern, guys. Up, down, back up, kind of a potential double topping area, a dribble down, and then a move to the upside. I certainly wouldn't think that we couldn't see exactly that in the other markets. Any kind of bad news or something could obviously change that, but look at what the NASDAQ did. I think the pattern is kind of showing us the way, and I really think that maybe we do get some follow through from both the Dow and the SPX to the upside here. That would be your last kind of finishing wave, and then maybe a bigger move to the downside. NASDAQ on a daily here, you can also see what it did up, back below. Notice how the bears were able to get back below the 200, but it didn't last long. Little gap up today to where? GFA, right above the 200, and then a runaway. Right up into 1880, which is one of the numbers we've watched over and over and over again consistently. Really watching now 1900 and 1920 for your next levels of overhead resistance. Looks like the NASDAQ just wants to be drawn there. And if the rest of the markets move up, that's exactly where it'll go. Coming back into this overhead area as well on the weekly. Now we've got a couple days left, so we'll see how the end of the week manages to work itself out. SPX on a 60-minute. Here's that little bull pullback that I'm telling you about. This could, potentially be the one to, if we move up tomorrow, that would be, I think, 3 of 5 of this last wave up, and then your move at this point is anywhere. I'm going to tell you 11:05, 11:15, and then 11:30. Those would be my marks to the upside. The thing can turn at any point. Once it breaks 1105, it's done what it's needed to do, and it can stop and turn around at any second. So you must be ready. You must be nimble. It could stop at 1110, could stop at 1180. Who knows? I don't know. I don't think it'll get that high. But right up into this area is kind of a very, you want to be very cautious up here in this area if and when we get up above that. SPX on a daily, you can see it. This looks like a pullback right in here, kind of an inside day today on the candle. I want to call it kind of an inside day. Anyway, holding below that 1100 mark. Breaks up and over 1100, watch the 1105. Then here's your 1115, followed by your 1130. Very clean to me on a daily chart. Anything back below these moving averages, though, got to, kind of be very cautious to the bullish side. It'll be a different pattern. Maybe we finished this wave here. Now we're working on a corrective wave, so you want to be cautious if and when we get back into these moving averages. If that happens tomorrow, or possibly, I'd say if it's going to happen, I think it might happen tomorrow. SPX on a weekly, still a little bit early to be looking at, where we're going to go here. We got to let this week's candle kind of fill itself out. But so far, we've gone nowhere. It's only been 2 days. Remember, it's an abbreviated week, so this volume won't be where it probably would normally be. Obviously, if you had 5 days of trading, keep that in mind at the end of the week when we get a close to this candle. We are trapped between the 50 and the 20-week moving averages, bouncing around in this area in a matter of about 12 points high to low over the last couple days. Very, very difficult trading for those of you trying to make some money in it. Here the VIX was down, confirming what we saw today with the little move up in the market, still hanging out in this overall wedge that we appear to be forming on the VIX from a weekly to candles going nowhere so far. Did have a good gap up to start the day, or start the week, sorry, but nowhere today, bouncing off the 50. So overall, all consolidation on the VIX. Apple had a killer day today. Just a very good follow-through. Look at this huge move by Apple since we bounced back here around the 30th. Just one level after another being busted. Breaks above here, right up into where? That 264 area. Got to have these marked on your charts, guys. They really do help out. You can see here I could probably tweak that line ever so slightly. I don't think we're necessarily above that line. I'd probably move that up a little bit. 265 being one of the more bigger overhead areas I'm certainly going to want to be watching here in the next few days. Apple being a little overextended here. So you want to be cautious if you are trying to go long Apple. Stick to the intraday trades. Up and above the 20-week. Looks like it wants to make its way back up into here, doesn't it? Let's see if it makes it. Gonna have to hold that 20-week moving average by the end of Friday. Watch that closely over the next couple days. FAS on a 60-minute, also with this move up, move down now, kind of stuck in limbo. This one makes it a little bit more tricky. Is this a 1, 2, the 3, 4, then a 5 with a little pullback here? A, B, C correction. With a 1, 2, are we about to start a 3 up, or are we about to start a 3 down? Markets love to do this type of stuff at the end of a day, and especially at the end of the week. They love to leave you in limbo. It's anybody's guess. We're just waiting for breaks, guys. Wait for breaks up and over this 2175-ish area to go long. Breaks back below probably, let's call it maybe $20. Probably, let me look at a daily quick. Make sure I can verify that. 2175, yes. Above 2175 for the long and above and below. This isn't quite $20. What is this level here? I'd wait for it to break this line right down here, about the 1987 mark. That's where I would be watching. 1982, 1985, somewhere down in that area. I'd be waiting for breaks of that. Keeping in mind that the 20-day is right below you. So once again, these are good intraday trades only. Now we get back above this area. Let's call it about 2175 or so. If we can get back up into this area here, we could see a little run in FAS. And that could take us back into the $22.50 to $23 area. That'd be my first level to be watching. That's a good trade in FAS. FAZ then, of course, doing the same thing as it broke through here, a pullback, but that of the bear nature. So any moves back down, I really would caution you against anything below 1325 for a short and above 1450 for your long. And keep it to intraday trading for the time being. This chop right now is very, very difficult to play into, but above 1450, I think we can get back to that $15 area, and below 1350, I think gets us back into the 13 to 1250 area. So we'll be watching those coming into the end of the week. Those are my plays coming into tomorrow at least. I will be back with you again tomorrow with a new video. Keep your mind on keep your eyes on these. This just looks like a pullback for the time being. So we have to treat it as such. Breaks up above here or go long, and then breaks back below here are finally your go short, and that's probably around 10 to 25-ish or so if you're looking to get short the Dow. That'll be it for today. We'll see you guys again tomorrow. Bye.